When you're low income, it can be difficult to save money and budget. After all, the little amount of money you have left over at the end of the month after paying for necessities is likely stretched pretty thin. Being on the low income spectrum often limits a lot of people's mindset. I mean, we understand since it often stops people from taking risks and instead settles on things that aren't enough for us. A lot of people often think that you can't make smart money moves if you don't have a big fat bank account. In reality, making smart money moves doesn't need $1,000 or even few $100s. You must be thoroughly aware of what you have and where it goes when there isn't much coming in or accessible to spend. While making money moves is much easier when you're making big bucks, it's entirely possible to do things on a low income. With some discipline and creativity, you can be sure to make some smart money moves. The key is to start doing these 5 easy yet great steps to get started. Let's get started. Number 1. Focus on getting out of high-interest debt. Before you start saving, figure out how much it costs you to carry your current obligations and how quickly you can pay them off. For instance, some student loans have interest rates of over 10% and high-interest credit cards might have rates of 20% or more. These rates are higher than the stock market's average annual earnings of 9.2% or so throughout time. If you have a lot of high-interest debt, it's a better idea to pay off at least some of it before investing. While you can't forecast the exact return on most of your investments, you can be sure that paying off debts with a 20% interest 1 year early is the same as getting a 20% return. Fortunately, if you approach debt in the right way, you can get out of debt faster. Additionally, you may be able to save a significant amount of money. Here are 5 debt reduction measures to consider. 1. Create a budget. If you don't have a budget, you may not know if you're spending more than you make. Budgeting, boring as it sounds, can be a useful tool for managing your money and planning for your future. Knowing where your money currently goes is the first step. Then, you can begin to cut unnecessary expenses and use the spare cash to pay off debt. 2. Debt avalanche strategy. You make a list of all your existing debts and organize them from greatest interest rate to lowest interest rate using the debt avalanche method. You continue to make the minimum payments on all accounts while directing any extra funds to the account with the greatest interest rate. Move on to the account with the next highest interest rate once you've paid off your high-interest debt. Continue in this manner until you have paid off all your debts. 3. Debt consolidation. If you have a high-interest debt, debt consolidation may be able to help you pay it off faster. You could get a personal loan from a bank or another trustworthy lender to pay off your other bills via debt consolidation. Going forward, you'll only have to deal with one debt and one monthly payment. Number 2. Cut costs from these main expenses. According to the Consumer Expenditure Survey, housing, transportation, and food are generally the 3 biggest expense categories for the average American household each year. What can we say? In 2020, housing costs like rent and utilities cost about 35% of the average person's budget. Transportation costs, on the other hand, consisted of 16% of the budget, while food expenses had a total of 12%. The 3 categories are seeing many cost components increase at their fastest pace in many years. Sure, you can always cut back on indulgences, but it's the large expenses where we bake a lot of fluff into our budget and call it important spending, according to financial experts. Take huge swings at these big categories and you'll likely save big chunks of money, they say. So we've added some tips on how you can save on each category. Housing costs. 1. Itemize your housing costs. 2. Refinance or lock in a rate before they rise. 3. Push to be mortgage-free. Transportation. 1. Ditch the car. 2. Try working from home. 3. Avoid buying a new car. Food. 1. Stop dining out. 2. Start meal planning so you can cut costs on your grocery. Number 3. Set automated savings from your pay. The consistency with which you set aside a specific amount in savings each month will pay off in the long run. The saver sets up an automatic savings plan in which a percentage of their paycheck is regularly put into a bank account on a regular basis. This type of savings plan is ideal for those who want to build up their savings over time without having to physically deposit money every few weeks. If you lack the motivation or organization to accomplish it on your own, technological assistance is accessible through smartphone and computer apps. Acorns, Capital, and Chime all round up purchases and other transactions to the nearest dollar and put the savings aside. Acorns invest the funds in one of several low-cost ETF portfolios which are ideal for tiny investors and we'll see later. Capital offers the ability to transfer money automatically based on the rules you choose. Chime, an online banking app, offers a saving account that automatically sets aside a percentage of every salary you deposit, among other features. If you don't want to use these applications, talk to your bank account about its own apps and other options to automatically move funds from non-savings account to savings accounts and investment accounts. Number 4. Create a side hustle. One of the smartest financial choices you can do right now is to start a side business. Nobody can have too much income diversity in this economy. Since the pandemic, even supposedly solid public sector employment have faced problems and shortages with their pay. According to the State of Independence report by MBO Partners, a provider of back-office services to independent workers, 56% of Americans indicated they'd feel more secure working for oneself than in a typical employment in 2020, up from 32% in 2011. Depending on a job as your primary source of income right now is downright perilous for the groups hardest hit by job loss during the pandemic: women, persons of color, and older workers. Even if you aren't concerned about losing your work, a side business can help you pay off debt, save money, and invest. It may also provide tax benefits. You may be entitled for tax deductions if you make purchases for your business. Aside from that, a side business can be the finest method to obtain a taste of a future vocation that you may wish to pursue full-time later. Number 5. Optimize your 401k. The IRS stated this fall that the contribution restrictions for retirement accounts will remain unchanged for 2021, which was terrible news for extreme planners. Workers under 50 can deposit $19,500 to their 401k and $6,000 to their IRA. Those 50 and above can add $6,500 in catch-up funds to their workplace account and $1,000 to their individual account, the same as in 2020. Most workers don't contribute enough to their retirement accounts anyhow, so they won't notice if the IRS skips an inflation adjustment. According to Vanguard, the average participant contributed 7% of their earnings to their 401k in 2019. Many plans let you arrange your contribution to rise automatically at whatever time you want, whether it's at the start of each year or if you get a raise. It's one of the simplest ways to improve your financial situation, and you won't even notice the difference in your salary. At the absolute least, you make contributions to your 401k to qualify for an employer match if one exists. We advise saving between 12 and 15% of your gross earnings, including the match. Despite having a low income, there is always an opportunity you can start in order to start making financial moves and improve your financials. Making smart money decisions while being low income has long-term benefits that can help everyone achieve their future financial success. If you follow the 5 smart moves that we have mentioned, you can then start working towards being debt-free and save money on better things and accomplish major life milestones. That's all for today, guys. See you next time.